Welcome back to our channel. As always, if you copy trading, you are an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to speak today about a stock called Grab Holdings Limited, ticker Grab, which just reported earnings a few days ago and will be reporting back on the 15th of August. So this is a 20 billion market cap company, however, relatively young, was founded back in 2012, and it's currently trading at almost 90 times forward PE. Now, in terms of what they do, they are a competitor of Uber, but in Southeast Asia, in the sense of they have the mobility and deliveries business. But actually, they go beyond than that. So they offer as well financial services in terms of loans to their customers. And that is one of the key reasons why the company is valued this way by the market. We'll talk a little bit about this later. But in terms of where it stands in the sector, it's 4 times larger than its nearest regional competitor. And despite EBITDA being growing quite well and EPS still remaining, if we look at it here, for year 2025, is making a shift into becoming positive. So this is really a revenue story, right? That we're looking at here. And we see that the EBITDA as well is improving. But they had 13 consecutive quarters of adjusted EBITDA improvement. And they are the only multi-vertical platform in Southeast Asia with this scale. Now, with Southeast Asia, it's important to mention that it's a region in the world which, unlike what you see in many parts of the developed world, and even other regions such as China and Latin America, is actually growing. So in 2024, the Southeast Asian countries posted a GDP growth of 4.5% compared to 1.8 versus the advanced economies. So the macro looks very benign in this region versus, say, a competitor like Uber. Now, when we look at the actual fundamentals of the business, they have had experienced a few headwinds along the way, but overall, it seems really strong because on-demand GMV, so the gross merchandise value, is accelerating to 20% year-on-year growth in the last quarter of 2024. That aligns as well with revenue growth of 20% year-on-year. We mentioned about the EBITDA. The balance sheet is pretty solid too. So if we have a look, we can see that they have almost 6 billion in terms of cash liquidity. So there you go. So that looks pretty strong for a company that is finding its way to revenue, but is by no means in a tight financial position. These guys are actually doing okay and could handle a blow if it was to happen. Now, personally, I don't think that will be happening because the business has seen expanding margins across segments, and as well in terms of the volume of service they provide has also been increasing. If we look at the KPIs, we can see that the monthly transacting users is up 17% year on year to a record 44 million. The transactions, as we mentioned, growing 19%, outpacing GMV growth, and the daily to monthly user ratio of 16% with upside potential. They also have cross-platform users spend 4 times more with 2.5 higher frequency. And their advertising business, they also increase revenue to 1.7% of GMV, up from 1.3 year on year. So management has proven their ability to navigate the challenges that come with managing a company like this, but also the regulatory environments across markets, because let's not forget that these guys do not only operate in one single jurisdiction. So if we come back to the description, we'll see that they operate in a wide range of countries, right? So Cambodia, Indonesia, Malaysia, Myanmar, Philippines, Singapore, Thailand, and Vietnam. So there's multiple countries that they have to operate in, and they seem to be doing it quite well. Now, in terms of what's going to be continuing happening, well, you can see from the trend here, right, that after they were listed in 2021, when the market was very frothy, the stock price plummeted, and it seems to be starting to find its feet. So we start seeing the moving average pulling up, right? And we see how this downward channel here has been broken, which likely leaves us with room for the stock to take off in coming months. And of course, that's going to be driven by fundamentals. So I see a number of catalysts there that are going to bolster the fundamentals of the company, which is the cross-selling acceleration. So they are going to be launching food to mud cross-selling, the monetization of advertising, the financial services integration. So they have 3 digital banks offering lending to customers, as well as new products that they're rolling out, such as share rides, advanced bookings, family accounts. We also should not discount the possibilities in terms of introducing AI into the operations and marketing of a company like this, which is very digital in terms of how it interacts with its customers. So the industry consolidation is accelerating as well. There's 4 competitors exiting markets in the last 18 months. And they are reaching a critical mass, which will enable them to significantly increase revenues from those cross-sell activities. So now they are selling to 6% of Southeast Asia population as monthly user. So with all that, it seems to me that this company is going to do very well. In terms of the technicals, I think I'm going to wait a little bit till we reach a level a little bit closer to the $4 mark. But after that, we'll likely be positioning myself to buy some calls ahead of the August earnings announcement. So this is something I'm going to keep in my watch list, but the fundamentals definitely signal to me that this is a stock that will be doing well in the medium term. Hope you enjoyed the video. See you soon.